Hey, what's up, guys? Sam here, and I'll be doing the free video for February 25th, 2022. So, a completely normal, boring week in the books, just a standard 25-point move in the SPY, high to low, low to high. Nothing to look at here. Or maybe there is. I want to talk to you guys in this video a little bit about the SPY setup that's here right now, as well as a couple of things to look for that I'm personally using as kind of clues or maybe some guide stones in terms of the conflict that's going on in Europe right now. So I'm not breaking any news to any of you, I'm sure, but you're all aware of the Russian incursion into Ukraine, and you saw the effects of that pretty much all of February, and then you kind of had the the high point, if you will, yesterday in terms of the attack, and then the low point turned to the high point in the stock market. Right, we got a face ripper of a rally for the last 2 days, and I'm going to show you a couple things that I'm looking at kind of off to the side that I think are going to give me some really good clues as to the direction of the market. So let's start here with SPY. I just want to give you kind of a brief overview of the bigger picture of the market, and then we'll show you a couple of things that I would look for that are critical components, or maybe just a way of tracking market sentiment around the Russia-Ukraine dynamics. So, with that said, let's start here with the SPY. The first thing that pops out to me is this weekly candle that just finished forming. Very strong weekly hammer candle where you flush below all the lows, no matter where you had a stop. Anywhere in this box here, and who wouldn't have had a stop? Anywhere in here, right? Most folks don't have 20-point stops on their SPY trades. And what it does is it actually clears out the entire book. So you have a ton of folks with stops below there. You're gonna have folks with stops below there, and this one candle from yesterday where it gapped down and then rallied all day basically clears them all out. So in a way, it's actually a really bullish. Well, in many ways, it's a very bullish candle. One, because it's a hammer candle, and those tend to be reversal candles, and then two, because of the bear trap dynamics, right? Anyone who was bullish, who had a stop, got stopped out. Anyone who was bearish and was looking to short that break of support, they got they shorted, they got filled on their short, and they were immediately off sides, right? And what does that do? Well, it makes the bulls that were already in, it makes them want to get back in, and so they chase it back in. For the bears that shorted at bad prices, it forces them to cover, right? So it introduces just like this huge wave of folks that are off sides, and all of it was on the buy side. Really impressive stuff here in terms of the SPY candle that I'm seeing. Now, although it is impressive, the SPY candle here on the weekly, it doesn't really change anything, at least for now. If you look at the moving averages, your 50 is still sloping down, your 200 is still flattening out, you still have your 21 crossing negatively through your 200, right? And really all you've done is just kind of get back into the trading range that you were in before. So it's a spectacular way of doing it, but it really hasn't changed too much. So the question that I think is on everyone's mind is, well, how much, does this have legs? Can this keep going? And at least for now, just going off the charts, I am seeing reasons to believe that it can. Now, I don't expect for this to change anything, but the question is not whether we can make new highs from this. The question is, does this keep going into next week? And at least so far from what I'm seeing, you have a cancellation of these sell signals. You see these sell signals over here on the far right. When you have buy signals, they get canceled out by sell signals. The same thing is true with the buy side. So here you have active sell signals. They've been canceled out, right? So this is more of an oversold bounce type of structure. This really, again, your moving averages are trash here. But the question is, does it have juice to get back to the center here where they would find resistance, or, and this seems more likely, break above the center, go back to the top, and then eventually kind of roll back over. And that seems to be the more likely scenario. In the event that that happens, either one, frankly, this implies that there is more juice here in the SPY and therefore pretty much in all stocks until that oversold bounce is relieved. Not only that, but then you have the beginning stage of a buy signal here on the daily chart. And and that would imply also that you could at least retest here, very similar to when you got these buy signals here and you failed at the midpoint. Same thing, right? So can you go back up to the midpoint and fail again? Certainly, certainly. But the main thing to take away, at least my takeaway based on everything that I've looked at with the folks in the premium video that I made before this video, it does have some juice left to go. Now the levels that I would give you on SPY are going to be 440, because that is the 618 of the high to low here. So 440 is a key level. Above that 445, which is the daily 200. And then symmetry, which I think is a very important level, which is 448 on the dot. So that's where I think the SPY is going to try to test. Now, that introduces the secondary topic, and that is the headline risk, the Ukraine-Russia dynamics of what's going on. We're going to have a blog out today discussing that a little bit more. So if you are interested in just getting a little bit more information regarding that, in terms of how it can move different markets, even markets that you're probably not even totally expecting, like the interest rate market, things like that, it can have effects on all these things. So with Ukraine, not a lot of folks know this, but they are a very resource-rich country. They are actually one of the most resource-rich countries, and they provide a lot of food and commodities, especially to Europe. And then, of course, they have all the Russian pipelines that pass through them to get to Germany and provide natural gas, which gets turned into electricity. So let me show you a couple of things that I'm looking at here. And the first one is just going to be very simple. It's going to be the RSX, right? This is the Russian stock market ETF. And you can see it's just been absolutely destroyed, right? It got absolutely clobbered after the invasion. It was already kind of on its way down, but then, they just really finished the job yesterday. So watch for a recovery here. Again, this chart is not good, so I do want to stress that as we go along. Even with SPY, the bounce potential that it has is just an oversold bounce. It's not really, it could become something much more, but at least as it sits right now, the structure completely implies that it's just an oversold bounce and nothing else. And the same thing would apply here on the RSX. Here you have a straight up bear trend. You can see it everywhere, regardless of whether you're looking at price or the indicators. It's just a straight up bear trend. And the question is, does this have an oversold bounce as well left in it? And it does. I mean, there's a potential to bounce back, anywhere back into this zone here, and it doesn't seem like a lot, but it actually would be a decent bounce. So in the distant corner of your mind, if you want to check something like this, I think it makes a lot of sense, because this chart will have to go up to confirm what we're seeing in other places. Now, this one seems kind of obvious, but there's going to be some places that are a little bit less obvious that I think are really worth your time to just maybe give a minute to tracking on your own. And one of them is, oddly enough, wheat. So wheat here, fantastic weekly chart. I mean, this is a very bullish chart. But you can see here it had a huge down move today, right? It had a huge up move yesterday, big breakout, and then today it had a even bigger down move. Now, why is wheat so important? Well, Ukraine is one of the biggest producers of wheat in all of Europe and, frankly, on the planet. So I actually like looking at this one a little bit more than RSX, because RSX is kind of, I don't want to call it basic, but it is basic. Whereas this is a little bit more, this is a bullish chart, right? I think we can all agree, weekly squeeze, weekly trend, try to break out of that previous high right there. That's all very bullish. So if you start to see this chart come back in and trade back, below the range that it's been trading, trying to break out from, I think that's actually a very good signal that the risk in the market is coming down and that you can be a buyer, right? So I do like wheat as a proxy for Ukrainian-Russian tension and risk associated with that. I actually like this way more than RSX. Another one is going to be palladium. So another bullish chart here, not as bullish as wheat, but certainly bullish. And you can see that these all kind of look the same. They have these kind of moon shoot candles, and then they come back to earth. Now, another one that you could look at here is going to be palladium. Between palladium and wheat, I think wheat will give you the better, cleaner signal in terms of tensions or expectations of tensions in the Russian-Ukraine back and forth that they're having. Another one, and this one's very obvious, but it's crude oil, right? Crude oil. You have a very big producer of crude on one side of this trade, which is Russia, and any type of geopolitical risk does tend to show up here. So I like a combination actually of the ones we've looked at of crude, oil, CL, or you can look at Brent as well if you like, but either one. So oil on one side and then wheat on the other. And the reason I like both of those is because I think they capture the spirit of one. Wheat captures the spirit of the Ukrainian dynamic, and oil captures the spirit of the Russian dynamic. And if they start to go higher together, that tells you that the market's probably seeing some risk continuation in that conflict. And if they both start to come down together, then that really does give at least a temporary green light to buying stocks and taking risks. So keep an eye on oil here, CL. For the record, it did hit my target that I had on it. I had a target of $100.60. The high is $100.54. So I think that's pretty close to good enough. It's fully structured, and if you want to see tensions dissipate, it will have to show up here. So definitely keep this one on your radar. And then lastly, another simple one I think is gold. So gold had a huge moonshot yesterday, and in classic gold fashion gave it all back and then a little sum on top. So keep an eye on gold here, right? Why is gold so important? Because folks are naturally looking for a place to hide, and there's really not many places to hide in the world if there is going to be that level of conflict, other than things that are really not connected very much, like gold, right? So the candle on the weekly candle for gold is very ugly. We have to admit that. I mean, here's your breakout level, and you put in this huge kind of attempt at a breakout, and then you close back below the level. That's not usually great, right? So understanding at least three of the things that I've talked about, and I'll give you the three best ones that I have. Wheat, ZW, oil, CL, gold, GC. Watch these three things. And if they all start moving lower together, think of it like the temperature on the conflict coming down. And if they all start to move up together, think of that as the temperature for the conflict moving up. So in the event that these three things that I think capture the spirit of the situation very well, wheat, oil, and gold, in the event that they all start moving down, that is your green light to buy stocks. You could buy tech, you could close your eyes and just buy an index. It would be a green light to take risk. In the event that these three things, wheat, oil, and gold, all simultaneously move higher, then that's going to be your clue that you should be a lot more cautious with longs, and that maybe you should even be open to shorting some stuff if you get the right signals to do so. Okay? So aside from that, the only other thing that I want to add here is there's only... well, we graded out the sectors earlier in the gold room. The best looking sector to me was still energy. That was followed by staples, XLP, followed by banks, although I don't like them, but I can't discredit the setup, XLF. After that was healthcare, XLV, and then lastly I had semiconductors. So from what I saw, those were still the five best sectors to focus on. So if you start to see these Russian-Ukrainian dynamics that we just talked about regarding wheat, oil, and gold, if you start to see all of those move lower, consider the banks, consider healthcare, consider the semiconductors, and consider the consumer staples, XLP. And if you start to see all of these three things, wheat, gold, and oil, moving higher together, especially if they do so in a very big way, then you want to be a lot more cautious, and you would look to get short the indices or buy volatility, or even just pick up some wheat, gold, or oil for yourself as a proxy hedge for the continuation of the conflict. All right, guys. Well, that's my time. I hope this was helpful. If you can think of any other things that would track well with the Ukrainian-Russian dynamic, and especially if you think they're better than wheat, gold, and oil here, drop it down in the comments below, and we'll check it out in the next video. All right, guys, thanks for stopping by. Hope you have a great weekend, and I will see you next Friday. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.